Morning, everybody, and welcome to the midweek market update from Smack the Markets for the 12th of June. So this week has been a little bit slow off the starting blocks, but now we're seeing that the focus is now coming back to the US-China trade situation and also increasingly the concerns over the future direction for the Fed and US interest rates. Seemingly at the moment looking more like a decline in or decrease in interest rates is more being priced into the market than the otherwise increase that was previously expected. So let's come and take a look at how the markets have been faring since Monday and the opportunities that we've been looking for. So if we come and have a look at the Dow Jones here, this is the Dow Future. Again, we were looking for a continuation of strong prices in the US indices after the very strong move that we'd had last week and the hold above that 25,500 level. Now, what we can see has happened if we take a look at the daily chart is that so far this week, the market hasn't really managed to make any headway above the 26,200 level. This was the sort of final sort of target level that we were looking at the end of last week. What we have seen is a bit of rejection, a bit of sideways sort of price action sort of pulling back in and sort of drifting back. Now, at the moment, I'm not seeing too much of a sort of a major decline, but the market is now sitting right on top of quite a significant level at 26,000 round number. So I think we're coming into sort of decision point areas. It was sort of fair to say that we could expect a bit of a retracement, but I think we're sort of coming back into that sort of potential sort of decision point as to whether we see a much deeper retracement here or whether we can see a continuation of the move. So 26,000 here on the 8-hour chart looks much more sort of technical. In fact, I've marked the level up to 26,000, but you can see that there is a sort of a range here from just underneath sort of 26,000 up to that sort of 26,000 on these sort of higher time frames where the market has sort of found previous support and resistance many times. So it's coming back into those sort of value areas, fair value areas here on the sort of mid time frames. And I think this is a sort of a decision point area where we might start to see support coming in. Having said that, there is easily further potential distance to the short side with this strong move still staying intact. So we remain nimble on the sort of intraday opportunities on these markets until and we trade the direction that the intraday move provides us. The longer term perspective that we're looking for here is at this moment in time is still our biases to the long side. Now, we're also looking at gold opportunities here earlier in the week. In fact, we were looking for a sort of shorter term move back towards that sort of 1320 area. We did get a bit of a break of this sort of level on the 4-hour time frame this week. We're looking for that break and that move down to 1320, which would have brought the market back into the sort of value area here, back into the moving averages and previous support on the daily chart. Now, we got half the move. We didn't get all of it. We got half the move, but this was enough to give us a successful trade. So we got a one target trade on this small break here. But then we can see now that the price has had different thoughts, and we're now sort of not retracing back into this area. We're now starting to the upward move. I still like gold to the long side here. I still think now that we're starting to see a bit of a turnaround, I think we could see sort of like higher prices, possibly up here to the 1350 area, but it's really going to be sort of opportunities on intraday timeframes. I think other commodities here that may be looking more interesting and maybe sort of a little bit cleaner for opportunities into the tail end of this week might be oil. Oil here has weakened off. It's sort of rolled over to a key level here at 52. You can see that 52 has been previous support and resistance before, and sort of a break underneath this sort of 52 level could see us for a sort of a swift move down here towards the next sort of close of that trading window, which is around sort of 50 and a half. So that's more the sort of opportunities here that I think we can look at on the commodity front. Now, when we come and have a look at Forex markets, we're looking at opportunities on Aussie dollar to the short side. That has continued to sort of play out, but it hasn't necessarily been the sort of cleanest of price action to trade. So we've had this move on the weekly chart where we've got this rejection off the 7,000 level, and we're seeing a sort of at this moment a sort of continuation of shorter prices underneath that level. The opportunities that we were looking for was a break of this level on the 4-hour time frame, and looking for price to sort of move down to initially that sort of 69,400, and then the next sort of trading window down towards that 69 level. As you can see, the market has ground lower, but literally it has been grinding lower, and this sort of choppy sideways sort of wiki price action hasn't been ideal for sort of trading setups and opportunities, not the methods that we use anyway. So we still like this one to the short side, but at the moment no opportunities on that. I think going into the second half of this week, we're seeing sort of strength coming back into the yen. So some of these yen markets are starting to look rather interesting. CAD yen, for example, we can see that here on the higher time frames, the market's starting to roll over off that sort of 82 level here on the daily chart. On these 4-hour time frames, we can see that we've now got a change of trend sort of putting into place here. I think below 81.40 puts us into some nice trading windows underneath price here on the 4-hour time frame, and of course it's in the direction of these higher time frame trends to the short side. Now, that's not the only one. I think also Singapore dollar against the yen also looking rather interesting, as the market is potentially rolling over here around that sort of 79.5 level. So you can see on the weekly chart, similar sort of scenario here. We're starting to get a rejection here after a pullback on the weekly. The same combination here on the daily chart, where we just got rejections off this sort of 79, sort of 73 level, which has been a support and resistance structure on this market. It doesn't looking like we're getting rejection of higher prices, and this one's a little bit of a lagger behind the other yens, but at this moment in time, still looking like it's wants to roll over to the weak side. Now, if that happens, then we'll be looking for trading opportunities short on these markets against the strengthening yen. So there's a few things that we're looking at in the trading room going into the second half of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.